but the patterns do look the same. So you're not going to get a different ABCD pattern for Forex than you will for commodities or for stock indices. And that's what gives you confidence, and that's one of the key points of trading, is that you want to develop this confidence in trading, and you want to develop a confidence in AutoChartist that it's going to produce patterns that are clear and consistent. Okay, so that's a very important point to know. So you can see here that after this point was identified, this bottom was identified at point D, the market has gone on a strong retracement of this leg C to D. We haven't changed the trend yet by taking out one of these previous tops, but we have rallied pretty substantially and approaching a 0.786 zone. So we've rallied past what I consider the important 50% and 618 levels. Now we seem to be basing or forming a little bit of a top near the 786 area. So that's how this ABCD pattern works in real time. And now we'll go back to our screenshots to see what other markets we can look at, or what other patterns we have determined. Now, you may have a question coming up here, and basically the question is, if Vet can help me out here, what does this ABC pattern look like? Just as a reminder to those people out there that are watching this webinar, what does it resemble? And if we go to our poll questions, we'll see that that question does pop up. The first question is, which pattern resembles a lightning bolt? And if you can answer that question, it's either the 3-point retracement, an ABCD pattern, or the 3 drive. That is absolutely right. It was a trick question. I didn't cover any of the other ones. The 3-point ABCD is contained in the 3-point retracement and the 3 drive, but the answer I was looking for was ABCD. So that's very good. All right, now moving on, we'll look at another pattern here, and that is our 3-point retracement Fibonacci pattern. You can see here there's no A identified, but the BCD resembles that lightning bolt that we had in that ABCD. And like I said, they're all going to contain that lightning bolt pattern, or that ABCD pattern. So what you can see here is that with a 3-point retracement, in this case the trend is down. You have your series of lower tops and lower bottoms showing us that the trend is down. And the key is that point D here, all right, stopped at about 50% or 618 of this B to C move. As I said, price and time are very important. It's important to have these symmetrical patterns. And what AutoChartist does is it tries to predict point D, which I'll show you on the live data, tries to predict point D in the emerging section of the screen. And what that does is, after point D is actually identified, then it gives us a forecast of a retracement of point C and D. Okay? All right, now this 3-point retracement area can occur at either a high point or a low point. All right, it's very important to note also that these occur at, there's no bias to which side it could occur on. But what you want to, again, focus on is the fact that this market, you can either be a trend trader and follow the trend down. That means that after point D is identified, you can start initiating new short positions. All right, let me move that back here. Sorry about that. And you have the choice to either try to pull the trade in on a retracement or let it go as it continues down. Once point D is identified, it tells you that that's an important swing, and it's important to the structure of the market. Because as the market begins to go down, it's important to note that in order to continue the downtrend, it must continue to make these lower tops and lower bottoms. Okay, if at any time it stops in one of these retracement zones and begins to hook up, you have to be worried or cautious at that time if you're short, that if this market does go back through point D, that the trend could be shifting back to up. Okay, so to a counter trend trader, he may be the one that decides he wants to buy in one of these identified retracement zones. And again, depending on his read of the marketplace, he's taking a little bit of a risk because he's going against the trend. But if he's right, there's a big payoff as far as risk reward's concerned. So depending on the personal preference of a trader, this pattern can be used as either a trend or a counter trend. Now, I always talk about risk at these webinars because I think it's important that you control the trade, and you should know what your exits are before you even put a trade on, and at the same time you should watch the capital that you have. And a famous trader once said, his name was Larry Hite, he said that never risk more than 1% of your total equity in any one trade, and by risking 1%, he's indifferent to any individual trade. Keeping your risk small and constant is absolutely critical. So what he's saying there basically is that not only do you have to watch where you put your stops, but you also have to watch your position size. You never want to put more money into any one of these particular trades than you can afford, and you don't want to have one trade wreck your portfolio or your trading account. So it's very good advice there to not only use stops but also to position size your account and your positions as money management. All right, so what we're going to do here now is switch back to live data, and we're going to take a look at that 3-point extension pattern as it's taking place this morning. Here's a stock index 3-point extension, and I will click that on, and we should be looking at some activity because we did have, like I said, that U.S. unemployment number, so there tends to be a lot of volatility in the marketplace. Okay, so overnight or just a few minutes ago, we had a pattern form, this 3-point extension form, on the JP225. That's a Japanese index CFD. You can see that auto chartist here has forecasted that C is a top at this point, and that if the market is going to retrace leg B to C, that it's got these potential downside targets. Okay, so you can see that this is the early part of the trade. The other one showed a later part of the trade when the market was already making its move. So what this chart is saying is that we have an uptrend because we had a breakout above point A. So the trend is going up, except point C looks like a counter trend trade. Okay, it looks like it's going to dip back into this retracement zone. So again, trend traders are going to have the choice whether to buy on a break back into these retracement zones, and here's again the prices that are identified. And counter trend traders are going to say, you know what, I think this market is a little bit too high. I'll play the short side for a quick move down into these zones. And if it continues to move down, I'll stay with it. And the trader that took the long side after point D was identified, he can have the choice to get out now that point C has been identified, or he has a choice to ride it down into one of these zones and then try to trail a stop if the market does turn around. So you can see that there's a lot of benefits to looking at this 3-point extension pattern to both trend and counter trend traders. And William O'Neill once said, and this is true when dealing with these Fibonacci patterns, is that what seems too high or too risky to the majority generally goes higher, and what seems low and cheap generally goes lower. That tends to work with chart patterns, which tend to break out and keep going higher. So a chart pattern or breakout theory, say of a triangle pattern or maybe a channel, that tells you basically that you can buy high and sell higher, where Fibonacci patterns are saying that the market may have ended and you can actually get a break from a high. So there's different philosophies And again, it depends on your personal preference and how many times and how you've experimented with these positions and how you've studied them. It's very important that you develop that that personal preference, because it's not always the system that fails or the chart patterns that fails. It's sometimes your approach or your strategy, and that if you do have a tendency to want to be a trend trader or a counter trend trader, you should at least be aware of it and the patterns that are going to fit the kind of trading that you want to do. Okay, now here's a copy or a picture of the 3-point extension pattern. Okay, what I showed you before was what we call the 3-point retracement pattern. Now the 3-point retracement, when it was making point C, it stopped up above the previous, or above this point A, for example, and started to turn up. With an extension, the loss extends beyond the low, or if it was going up, beyond the high. So in this case, this B to C extends beyond this point A, indicating that there is a weak market. There's also price and time symmetry involved, because this leg from B to C is often related to the length of this move from A to B. Sometimes it's equal to 1.618 of this move, and sometimes it's as much as 2 times the size of this move. But you don't really have to worry about that, because AutoChartist does the math for you. Okay, and if the conditions are right, it's going to identify this at point C, or this bottom, as a valid bottom based on the algorithms that are in there. But once it determines that point C is a good bottom, okay, and the beauty part about this is that when you could see that point C was formed, and it was basically 1, 2, or 3 bars away, or 3 candlesticks away from this bottom. All right, AutoChartist will start to give you a sign or show you it's a completed pattern, typically within 2 bars or 2 candlesticks of that bottom, so you'll have time to exploit the move. And in this case, it's predicting that based on B to C, that this could rally to 50% level. Sorry about that. And that's at 1.6259 in this example, or it could go to 618 or even higher. If it retraced the entire leg, it would go to this 100-point level, or 1-point level, which is 1.6441. So that's how the Fibonacci extension pattern works, or the Fibonacci extension pattern. What it does is pattern extends down, and then you have this counter trend move. And again, I'll repeat myself. You have the opportunity as a short trader to tighten up your stops once point C is identified, because this pattern could lead towards a strong retracement. You also have the opportunity as a counter trend trader to take a trade opportunity once this bottom is identified, looking for any one of these prices as your target. And of course, if you're going long against a trend, you have your stop point under point C. Okay, so that's very critical. So the extension basically finds support or resistance within the last major move. This is the last major move. Okay, and it's also used to determine where a current move is or may end. Okay, so going back to the live data again for this 3-point extension, let's take a look and see what the FX majors have done this morning with this 3-point extension. We'll click that on, and we'll see what we've got here. And we're crunching away at the data. All right, we have no emerging patterns, but we do have a 3-point extension in the Australian US dollar. And there it goes. Okay, here's a case where it was formed. All right, but we didn't get very much follow through here. So the market was stronger than the pattern identified. So mathematically, the pattern had set up a top at C. But what controls the pattern ultimately is volatility and momentum and a trader's will, or the collective traders